Hello everyone, it's Wednesday, October 15. Today we're analyzing the euro and British pound charts to assess potential market direction. In early trading on Tuesday, the euro came under pressure following weaker than expected economic data out of Germany. Both the economic sentiment and current conditions indices disappointed. The Eurozone Economic Sentiment Index also dropped to 22.7 in October from 26.1, while economists had forecast an improvement to 30.2, which amplified pressure on risk-sensitive assets. UK labour market data also came in below expectations. The pound saw a sharp sell-off after the unemployment rate rose and climate counts increased, pointing to a softening jobs market. Later in the day, attention turned to Federal Reserve Chair Jerome Powell's remarks. He signaled that the Fed is preparing to cut interest rates at its October meeting to support the economy amid signs of weakening labor dynamics. Although the latest figures were not released due to the U.S. government shutdown, Powell warned that the slow pace of hiring could drive the unemployment rate higher, underlining the case for monetary easing. In response, the dollar weakened across the board, posting notable losses against both the euro and the pound. Turning to today's macroeconomic calendar, key releases include French inflation data, which is expected to show a 1% decline in September. Investors will also be watching Eurozone industrial production figures, though the data pertains to August and is unlikely to have a strong impact on market sentiment. In the United States, the spotlight is on the Consumer Price Index. However, the release remains uncertain due to the ongoing government shutdown. In the absence of official data, traders are expected to take their cues from Federal Reserve officials, specifically any forward-looking signals on monetary policy. Still, after Fed Jerome Powell made it clear yesterday that the central bank intends to cut rates and its upcoming meeting, prospects for notable dollar rally appear limited, even if CPI data is published as scheduled. Now let's move on to technical analysis. The 1-hour EUR USD chart suggests that a false breakout at 1627 would generate a sell signal, potentially putting the euro down to 1601. A confirmed break below this level would lead to further losses to 1.1574 and possibly open the way to 1545. At this level, I would recommend going long on a rebound, aiming for an intraday correction of 25-30 pips. Long entries at 1574 and 1601 should be considered in the event of a false breakout. Alternatively, if the price breaks above 1627, the euro could rise to 1661. The most distant target would be 1687, where it would make sense to look for short opportunities on a rebound, targeting a 25-30 pip move. Short positions at 1661 and 1627 would only be appropriate after a false breakout. As for the British pound, the trading setup is similar. The GBP USD pair remains within a broader sideways range, though the bias currently favors sellers. With a light macroeconomic calendar in the UK, which only includes a speech by Bank of England Deputy Governor Dave Ramsden, a false breakout at 33.61 could provide an opportunity to go short, targeting 33.25. A break below this level will likely push sterling down to 1.3289 and potentially pave the way for further losses toward 1.3253. At this level, it would make sense to consider long positions on a rebound, aiming for an intraday correction of 30-35 pips. Long entries at 32.89 and 33.25 should only be considered following a false breakout. If Ramsden delivers hawkish comments, especially considering that many BOE officials currently see no rate cuts this year, a break and consolidation above 1.3361 would trigger a buy signal, potentially lifting the pound to 33.92 and possibly 1.3424. Around 34.24, short positions could become attractive, with an expected 25-30p move on a pullback. Going short at 33.92 and 33.61 would only be appropriate in the case of a false breakout. Good luck to all.